Hey everyone, welcome back. Today we're looking at Volvo and Polestar. Investors fear car maker's strategy lacks juice. Let's take a look at this a little bit closer. Electric vehicle buyers fret about range. Investors in Volvo cars have similar worries about the staying power of the car maker's new strategy. The company has promised to end production of internal combustion engine by 2030. Sales of the battery-powered car and SUVs are growing at a double-digit rate, yet its share price trails European competitors and EV specialists. Since it's listed, its market value has dropped by over a third. Volvo Company, which is majority owned by Chinese Geely, may not meet its target, although EV sales have grown 27% over 2 years. Not all expansion is profitable. Polestar Volvo upmarket EV brand loses money. Volvo owns 48% share of Polestar. Its losses, plus those of other associates, weighs on the group operating earnings. Polestar will not go into the black until 2025, according to analysts' estimate on Visible Alpha. Time and money are required from Volvo. A week after the car maker's third quarterly earning, it announced it would extend its financing to Polestar by another $200 million, plus $1.3 billion via an external debt and equity raising. That sounds like an overhang on the shares. Meanwhile, Volvo's free float is a mere 18%. There's little profit growth elsewhere either. By 2024, group operating profits, including joint ventures and associates. Now, to sum this article up, essentially what it's saying, as long as the market doubts Volvo's execution, the share price will only move downwards. The cheap valuation will only suit the most patient investors. Now, this is something that I've spoken about before, whether or not the Geely and Volvo strategy will work to be a success for both companies and for Polestar as well. And it indeed is very difficult to estimate. Now, if we're taking a closer look at the Volvo companies, this is the Volvo's group stock. And to be honest, as you can see for yourself, this company has been performing really well over the past year. If we look back even further, over the past 5 years, they've been performing incredible. Granted, in 2020, they had a huge dip in price, but so did many companies. Apart from that, Volvo Group has been strong over a very long time. It's actually really impressive to take a look at this. This is why I have good trust in the Volvo company. This is why I trust that Polestar, they're in good hands. Volvo has been known to be a really outstanding company for quite some time. But here's where we falter. Recently, Volvo actually went public. The Volvo Group has been public for quite some time, but Volvo cars have recently went public. And this has created a difference. Granted, like many companies, they're a little bit overpriced when they go public. And unfortunately, it looks like the market determines that Volvo was overpriced. Volvo car brand, at least, the car part of their company. Volvo creates a lot of other stuff, especially within the Volvo group. They're a much bigger company than just the cars. It's not just cars they create. They create so many other products like trucks, heavy industrials, vehicles. But you can see the car stock has not done particularly well over recent years. And it looks like they went public in the late parts of 2021, around October. And I've stated this before. I believe the Volvo company, it is undervalued. Not the group per se, but the Volvo car stock, it is undervalued. The market cap is 97 SEK. That's the Swedish krona. So in pounds or in dollars, let's find out how much that is. The market cap is a shocking 7.57 billion in market cap. And for the Polestar company, they're just around 4.4 billion in market cap. That could easily tell you that the Volvo car companies is heavily undervalued. But the question is, where the hell do I buy these shares? Because I can't seem to get my hands on them. By the way, that's not financial advice, it's just my opinion. But this is a huge concern for a lot of people. The Volvo brand, like many other traditional car companies, they're going through a huge shift. Some think it's being done a little bit too sudden, others think it's not being done fast enough. Volvo sees itself in a position that they have to tackle a new market, the electric vehicle market. They've got to tackle new competitors like Tesla, and that's not as easy as it seems. But Volvo has taken this upon themselves to create better vehicles than they've ever done before. And I believe that the Volvo EX30 will be that vehicle for many consumers. It's perhaps one of the most affordable electric cars that's going to hit the market. And in terms of size, you can see it's a mid-size electric SUV. It's very minimal. It's true to its nature, being a Swedish company, being a Swedish car that created by Volvo. I believe this vehicle will perform very well in terms of sales. As you can see, SUVs are starting to become a lot more popular than sedans. For many reasons, the market has shifted slowly but surely towards electric SUVs, more so than others. In fact, the most popular Tesla vehicles for consumers, it's not the sedan, the Model 3, it's the Model Y, the mid-size electric SUV. And what I like most about this vehicle is that it is very much what all consumers have been waiting for in the global market. They've been waiting for an affordable, more affordable electric car. And this car, it's a similar size to the Model Y, but it will be significantly cheaper for consumers. I believe this car is going to be a hit for Volvo. I believe this car and the EX90 will put Volvo on the correct track it needs to do to recover back to the company they used to be, and perhaps even surpass who they used to be. They're going to do even better. So I've always held great trust in the Volvo company, and this is why I tend to like Polestar as well, because they're owned by Geely and Volvo. So if I trust Volvo, I can trust Polestar. That's how I see it anyway. But listen, that's it for today's video. Thank you for watching, and I'll see you in the next one. Peace.